Is Mary Maish, and I will be your facilitator for today. I have just a couple of slides to share with you before I introduce our presenter. Always takes a minute for my computer to wake up. Danny, can you see my slides?
They just came up.
Good. All right, once again, good morning, everyone. Thank you for joining us today for the SCORE workshop, Making Your Business Lendable, Net 30s, Credit Cards, and SBA Loans. As always, here are our SCORE guidelines. Please keep yourselves muted unless we ask you to unmute your microphones. And of course, as always, we'd love to see your faces if you'd like to turn on your videos. Not required by any means, but if you feel like it, we'd love to be able to interact with you that way. And always, questions are always welcome. Keep in mind, this will be a high-level general overview, so try to keep your questions as high-level as possible and not extremely detailed and directed at your business. That's a very good question for a SCORE mentor, so try to keep your questions so that the answers will be relevant to everybody attending. And if you feel like you might have missed something during the presentation or something you'd like to review, don't worry. We're going to be sending you a link to the recording that will go out in a couple of days after the workshop, so you'll be able to review it at your leisure. So be looking for that in your email. So just a note about SCORE. SCORE's been in business since 1964 and has developed a network of over 200 chapters throughout the country. And within those chapters, there are over 10,000 volunteers who are ready to help you in any phase of your business, whether you're just starting out or whether you're trying to grow your business or even at the end of your business's life cycle. Wherever you are and you need help with mentoring or coaching, we have business leaders who are able to help you in any business discipline you can think of. So if you don't have a mentor, it's a free service to you. You can use this, scan this QR code. It will take you to the website you need to go to. You just pop in your zip code and you'll be matched up with mentors in your area. So I have a friend who is a presenter for us who used to be a client, and he likes to say, if you don't have a mentor, what are you waiting for? As I said, it's a free service to you. So one other thing about SCORE I'd like to talk to you about today is SCORE receives federal funding. And this allows us to provide our free services like this workshop you're attending today and all of the other educational events and activities that we are able to offer throughout the country free of charge. So the federal funding also pays for our ability to offer our mentorship or mentoring program free of charge. And so what we're asking for you to do is to contact your legislators to make sure that SCORE's funding is protected in the federal budgets that's being discussed right now. And we've made it very easy for you to contact your legislators. I'm going to put a link in the chat, and this link will take you to a pre-drafted letter, which you can change in any way you'd like. But the really exciting part and easy part about this is if you put in your zip code, it will know who your legislators are, and you'll be able to send a letter to those people who represent you so that you can talk about how their voice matters in this discussion and your voice matters. And you'll be able to tell your legislators how SCORE has been important to you over the years. So please consider doing that. As I said, I'm going to put a link in the chat that you can use to contact your legislators to help us protect SCORE's funding. So that being said, I would like to introduce you to our presenter. Hang on just a minute. I have to get rid of a, there we go. I'm going to let a couple of people in from the waiting room. Here we go. There we go. Okay, so our presenter today is Danny Williams. Hang on one second. We had a lot of people waiting. So Danny is co-founder and executive for Growegy, and he's been leading growth initiatives, marketing, and partnerships. The first half of his career was spent in marketing with medium and large fintech companies in Silicon Valley. Recently, he's focused on helping small business owners thrive by providing enterprise growth and strategy tools at affordable prices. So I'm going to stop my share, Danny, and you can take it away.
Thank you, Mary. And hello, everybody. I'm glad to be here with you today and share a lot of information that I've learned and gleaned over the years from working at various companies, including some of those fintech companies out of Silicon Valley. So companies like PayPal, companies like Wells Fargo, Technology Credit Union, uh, just a wide variety of companies that we've gleaned a lot of this knowledge from and bringing that to you. So I'm going to start my share. Okay. And there we go. So our topic today, here we go. Can get rid of that. Perfect. Is right, making your business lendable, as you're all, looking to say, what does that mean? What is the process to get there? So we're going to cover several steps. Now, the agenda, as you can see here, there we go. I'm going to cover each of these sections, and there are some subsections in there. There's a lot of questions. There's a lot of information. We have plenty of time to get there. Now, at the end of each section, if you have a question that is specific for that section, I'm going to pause so we can take those. If you have a question that's not related to the section, we're going to put that in a parking lot, and then we'll circle back to the parking lot at the very end for some Q&A and to try to address as many of those questions as possible. So feel free to type those questions away in chat, and then Mary can let me know what those are at the end of each section. So without any further ado, we will get moving. But before we go chapter by chapter, right, if everybody's looking for funding, the first thing that typically comes to mind is an SBA 7A loan. They're typically the easiest to obtain of the SBA loans. Not necessarily the easiest financing to obtain, but of the SBA loans, they are. And the big secret is that obtaining capital, whether that's the SBA or anybody else, is really about convincing somebody else to give you money and that you're going to pay it back on time. Now, that usually means they want to see how you do business. They want to see how you operate personally. And when it comes to SBA 7A loans, it isn't free money that you can get without any strings attached. It's going to require both your business and personal credit. And in addition, will require a personal guarantee so that you are liable for the money. So you can't just take the money from a lending institution and then default on the loan and have no repercussions just because you're a business. They will tie in your personal for SBA 7A loans. Now, there are ways to go about getting credit and some capital that don't require some of the personal credit, but we will talk about those as we move forward. Okay, so that's the first big aha and secret. The other one is for SBA loan qualifications. It's going to require four things, and you can see those four things here, right? Revenue, time in business, personal and business credit to qualify. We're going to cover each of these sections in depth, but just at the very beginning, right, this is what the whole presentation is aimed around, is how do I qualify in each of these different sections in order to qualify ultimately for that SBA 7A loan. And what is that 7A loan? How long do I need to be in business? All of these questions will be answered and built upon throughout the presentation. So starting with the business credit scores. And I say starting with business credit scores and immediately jump to talking about personal because it's important to understand that both are required, but that you also want to keep them separate, and that some of the same institutions have both a business credit side and a personal credit side. Now, on the personal credit scores, I'm sure everyone's heard of TransUnion, Experian, and Equifax. And the way that they use the FICO score, because you'll go to them to find out what your FICO score is. So the FICO score is on a scale of 300 to 800. But there's also the Vantage score. So essentially, all of these companies are in business to do one thing, and that is to make money by selling your data. And so all of if whenever you think of a personal credit score, we like to think of them as government institutions or quasi-governmental institutions. And at least on the personal credit side, it is highly regulated. So that makes it at least a level playing field when you're going to compare scores to each other, when you're understanding what constitutes a score, and how to improve it, or how long things stay on your personal credit report. And ultimately, FICO was the big player in there. But a few years ago, TransUnion, Experian, and Equifax did create the Vantage score. Now, it's scored exactly the same way, but they wanted to say, hey, FICO shouldn't be the only one selling your data, right, as your personal data to other companies. And the companies they're selling it to are lenders. Because the lenders coming in, and while we're getting our personal credit scores for free, we can log into our bank account, we can go to freecreditscore.com. We can see what our credit scores are. But all of those credit scores, and the reason those companies are so large and are in business is because they are selling their unique algorithms and data and risk models to lending companies. And that's how these companies make their money at the end of the day, is by charging. So it's important to know what your personal credit scores are and whether they're using the Vantage score or the FICO score, they're scored exactly the same way. Now, when it comes to the business credit scores, right? Again, AKA data algorithms. Essentially, what does the risk model look like on the business side? Experian, Equifax, and Dun and Bradstreet have all created an additional score that is the first entry score that you can start to obtain from your business perspective. They're all on a scale of 1 to 100. And essentially all it measures is whether or not you pay back your debt or your obligations on time. So a score for each of these, they just have the different names, but they're all the same thing. A score of roughly 80 means perfect, you're perfect IntelliScore or payment index or paydex score. And that means that if I take out a loan and I have 30 days to pay it back, or I buy a product or service and they invoice me with a 30-day invoice, as long as I pay it back on time or a little bit early, I'll end up with roughly a score of 80. And for most small businesses, that's about the best you can get. I think is about an 84 is the best I've seen a small business obtain. And when I say small business, I mean usually companies under $1 million, under 10 employees, in the first few years of operation. And because the a level of funding that they're taking or the type of accounts that they're obtaining are based around net 30s, versus the higher end of the score are based around companies doing like net 90, net 120. And those would be things like construction companies or manufacturing, where they're obtaining large amounts of resources and goods to build their product, and they're taking out larger loans, if you will, from those companies. So I'm going to get $1 million of resources to build my product or build a house up front, and I have 120 days or longer to pay it off. Now, if I'm paying 60 days early or 90 days early because we built the house faster, we sold it because there's demand in the market, and I can pay back that debt quicker, then that means I start to get a score of 90 to 100, which means that I'm in a position to take even larger loans, or larger resources, and credit from other companies. So again, small businesses, you're aiming for around an 80, and that's the score that you're going to create with each of these. But how do you create that score? And that's the important thing. So before we get there, I want to look at the small business scoring service. Now, FICO has built a small business scoring service, which it gives you a number based off of combining your personal credit score and that business credit score I just talked about. And when you combine those, you get a score of a range of 0 to 300, or higher is better. Now, this reflects the SBA score that they use, which is called the E-Trans score. So stay with me for a moment because I know I'm throwing out all kinds of acronyms. But the SBA has their own data algorithm to say what is the risk for whether or not we should guarantee a loan. Because The Small Business Administration does not give loans. Banks give loans. Other lenders give loans. The SBA just guarantees a percentage of that loan to the lender in case you default as a small business, which is great because that means that larger institutions are willing to lend to a small business because they know they have at least a 75 to 85% guarantee on the money that they lend to you. So their risk is actually much lower, meaning that they're willing to give you a loan. Without the SBA, small businesses would essentially never get a loan from any large bank or institution. And that's part of, right, was the identified need in the creation of the SBA loans and guarantees. So the SBA E-Trans score is proprietary to the government. They hold that score and they use that score in order to figure out how much of the loan they'll cover or whether you even qualify for SBA coverage. The FICO SBS score is the privatized version of that and from what we've talked to in talking to loan brokers, is the closest approximation of the E-Trans score that you can use to understand before applying whether or not you're going to qualify. Essentially, if you combine your two scores together, if you have roughly a score of like 680 on your personal credit side and a score of 80 on the business credit side, that will result in a FICO SBS score of about 155. So I'll remind you of that number later when we look at the SBA requirements for what number you have to hit in order to qualify. But just know that 680 plus an 80 equals 155. It's funny math. So with that, before we go to the next section for actually how you build the business credit side, you may know how to build the personal credit side, and I'll assume that everybody does. But before we go to how you actually build that 80 score, I'll pause to see, Mary, if there's any questions.
No questions so far, Danny. Thank you.
Okay, great. So then we're just going to roll right into how do you actually build that business credit? Now, the first thing is you want to actually have a business established. And I added this to the presentation because I was working with a group last week where we were doing a similar presentation, and it came to the Q&A section, and I had a lot of questions about how people establish a business. And I had assumed, right, coming in that people had already established it. So the first step before you do anything else is you need to register with the Secretary of State. And then you need to register with the federal government once you get your official business name and obtain a matching EIN, right? Employer identification number or tax identification number with the federal government. And I am listing right 4 states here that we have found are great for establishing a business. Nevada being first, and in 2020 when we started Growegy, we actually started in Nevada, in Las Vegas. So that was where we started. And then because of angel investors and institutional lenders, which I'll talk about at the very, very end for how you talk to them, they asked us to move our incorporation to Delaware so that they were actually allowed to lend money to us as a business for our own expansion. So I'll cover some of those details later, but that's why multiple are listed here in terms of where to start your business. Nevada is a wonderful state to start in. Okay. And then, so that's, establish a business. Now, you can have a business from anywhere. I just, sometimes the question was like, well, where would you start a business if you're going to start a new business today? Any state is fine. It's not an issue if you already have an established business and it's in a different state. It doesn't matter. Okay. So you want to next separate your finances. You don't want to pierce the corporate veil, which means that having an LLC affords you certain protections, right, as a business owner, or having other types of business entities. You're creating a business, and essentially, when you create an EIN, essentially, right, your social security number is your personal corporation, and the EIN is your corporation's corporation. And you want to keep those two separate so that they're not both liable in case anything goes wrong, in case you're sued, in case suppliers fall through. whatever happens. You want to keep them separate. So you do want to get a bank account or operating account in your business name. And you do want to use that for everything you can use it for that's business related, and keep your personal separate. Doing those two things are going to help protect you and your business long term. It'll protect your family. It'll protect everything you've built on your personal side while you're doing the hard work of, establishing a business, hiring employees, trying to find and customers and do sales. While you go through that process, it can be challenging and there's risk involved. So keep those two separate so you're not risking more than you absolutely need to. Now, to build your business credit, you want to start with vendor or trade credit. Now, I say net 30 vendors. You'll hear me say net 30 a lot, and you've probably already heard me say it a few times, is the best way to establish that credit history and to get that Paydex or that IntelliScore or the payment index score from the business credit bureaus. Right, you can read there, you probably have already ahead of me, right? It's net 30 is about a business offering a product or service. So for Growegy, we offer a business service and some products and some consulting. We do that on net 30 terms. So it's X dollars. When you sign up, we send you an invoice. You have 30 days to pay. When you pay that invoice to us, it goes into our reporting and we report that transaction to the business credit bureaus that we have a relationship with. It works the exact same way, no matter what net 30 vendor that you're talking with. And I'm going to show some additional net 30 vendors here in a moment. The great thing is that if you're starting your journey and you want to protect your personal credit, there are net 30s that offer that no personal guarantee, right? No personal credit check, and it's the best way to start in terms of building that business credit history so that you can start to put your business in the right position overall. And those net 30 vendors. Newegg business. Newegg is kind of like, think of Best Buy if you're not familiar with them. They offer a lot of electronics and computers. They're kind of like a staples. Granger has more industrial supplies and janitorial supplies and much bigger operation. Of course, had to throw our name in there in the middle. JJ Gold, the CEO Creative, our business services. You can get products. You can get things like T-shirts. You can get printed labels from them. There's a lot of different things. And so when you order from any of these businesses, and there's many more, there's a list of 21 net 30 vendors. If you search nav or nav.com, and they'll have a list of 21 vendors they recommend. You'll see these names on there. And you can find out more services that you may be able to utilize to build your business credit while also obtaining things you need for your business on a day-to-day basis. So essentially, all of these, they don't, you have to check because the terms change. So I can't speak for all of these on whether they require a personal guarantee or whether they check your personal credit. I don't believe any of them do. But I would double check their terms and conditions on their actual application page. I can tell you, at least for ours, we don't check either. And so that's, a great place to start. The next place you can start is obtaining those transactional business cards, right? So a debit or credit card that you may be offered one from your lending institution. So originally I said, get a business right established, get your EIN, and then go get a bank account. When you get that bank account, some banks are a little bit more friendly and they will offer you that business credit card right up front connected to account. Those are typically great accounts to get, but before you say yes, you want to ask them a couple questions, right? One is there going to be a personal credit check when you offer me this card? From banks, most of them are going to say yes. The second thing is, which business credit bureaus do you report to? If they can't tell you the name of the business credit bureau they report to, they likely don't report to a business credit bureau, or you're talking to somebody who's just doesn't even really understand the difference. They're focused on selling you accounts at a bank. So you can ask to talk to the business person, the manager, or regional person. You can ask for where you would find that information. Essentially, some banks are better than others. Chase tends to be one that does report to business credit bureaus, but it also can depend on the actual account that you get and the card that you get. So some cards, it's always confusing with banks. Some cards banks have will report and other ones won't. And so they're excited to sell you a credit card, right? Because the way bank employees get paid in a branch is, they know that they're going to get incentives for however many accounts that they open. That's something Wells Fargo got in trouble a while back for opening too many accounts even without customers' permissions. Because the secret in banking is if you have a customer that has 6 accounts. So that could be a savings account, a checking account, it could be a CD, it could be a debit card. When you have 6 items from a bank, you're likely never to leave the bank. And so it's a good way for you to check, hey, I have so much wrapped up in this institution that I'm not really considering leaving because it feels like it's too much of a process to move to something, even though I'm not really happy with the service that I get. So they know that if they've sold you 6 accounts, you'll survive through some bad service with them, or even not. You'll stay with them even if they don't have the best rates, and the next bank does. So that's the big banking secret. Giving you a lot of little juicy tidbits here, but essentially, right, you just want to make sure, is there a personal credit check, and can you name the business credit bureau that you report to? If they don't, it's best probably to say no, because you do want to protect that personal credit. Because if you have too many hard inquiries on the personal credit side, you'll start getting denied for accounts and lending later down the line. And you can't take those back because those accounts and those inquiries will sit on your account for 12 months. So you'll have to wait even longer before trying to go for the next, step, next process up. Okay, so here's 2 cards that don't have a personal guarantee and that do report to the business credit bureaus. So you'll have to ask the banks, but I can tell you, if you work with Fairfigure or Nav, 2 companies that we love, so fairfigure.com or nav.com, these 2 companies both have accounts where you can sign up to build your business credit, just like on the net 30s, and they have subscription models just like Growegy does. But they also have business cards, and those business cards do report to multiple different business credit bureaus. So Fairfigure, for example, they report to Experian, Equifax, Dun and Bradstreet, and also Credit Safe. And that's, it's the best thing about these cards. I highly recommend getting one or both of them. But the best thing about the cards, especially the Fairfigure card, is when you get that card, you get an invoice from Growegy. You can use your Fairfigure card to pay Growegy's invoice. Then you pay off the Fairfigure card, so it's one, set of money out of your pocket, but you're going to get 2 different reports that go to all of those bureaus from those 2 different companies. So now you're kind of double dipping without double spending on those same accounts. So it's a great way to build up your business credit history. Now, I've kind of shown you these personal credit cards. I'm going to jump back. I've shown you a couple net 30 vendors. Now, the important thing between the net 30 vendors and these cards are you want to build your business credit over time to ensure that you have a good score, that you have enough business credit history where you look legitimate, and that there's multiple references coming from different types of companies. So in order to do that, you essentially want to start off with 5 different net 30 based accounts, or net 30 plus these no personal guarantee credit cards. When you have a total of 5, you want to use them every month for 6 months. And that will be the fastest way to guarantee that you have a lot of the business credit history built up, and that your score will be generated, and you have the best chance to have the best possible score. Now, at the 6 month mark, you can drop 3 of those accounts, and I say, keep 2. You'll keep one of the cards, and you'll keep one of the net 30 accounts, and you want to keep that active for as long as you're in business, because that will continually keep and maintain your business credit scores, and it'll continually show activity to the business credit bureaus, which will lower other scores. Now, every business credit bureau, the one I've talked about was like the payment index score, but they really have like 5, 6, 7 different scores, all looking at different avenues of like risk modeling. So what is the risk that this company is going to close in the next 12 months? What's the risk of this company defaulting on a loan? Do they pay their bills on time. There's a lot of different scores like those that the longer you're in business and the more activity gets reported, the more those scores also increase and fixes your total risk profile for when you're later going to go for lending. So it's a really great way in order to build up that history over time. Okay. So there are sales-based lending options, but before we go there, I'll pause for any questions and take a
Um,
drink.
I I do have a question from Jeray. If the business is already incorporated in Delaware and has an EIN, do we still need to register with the state?
So if you are in Delaware, then you are already registered with the state. You don't have to register with the state that you're in. But if you are not living in Delaware and you need to open a bank account, sometimes there are challenges, and you're technically a foreign entity because you're a Delaware institution trying to get a bank account and lending, into those different areas, right? So I want to get um a bank account. Sometimes companies are required to go to the state, even though you may like work with Bank of America or Chase in the state that you're located. Um, you may have to go to Delaware in order to actually open that account. That's not always true, and sometimes you can get around it online. So there are ways around it, but there can be challenges from that perspective. But if you're already registered in Delaware, you already have your EIN, you're good to go. You should be just fine.
Thank you, Danny. I have one more from Ott. How can you find out your business score for free?
So you can request your business credit score from like that score. You can actually go directly to Experian or Equifax, and you can request a copy of your business credit report. They may or may not give it to you for free. They may ask for you to pay for them. It changes all the time. The other thing you can do is you can look at the options when it comes to you can look at those options when it comes to nav, and you can look at fair figure. They both have accounts that are paid that show your business credit scores across multiple bureaus. So I know it's free. Those are paid options. The only one that I know that you could potentially see for free, but it's only for 30 days, is by registering your business with Dun and Bradstreet. And they have you claim your DUNS number. Just know when you do that, even though you're claiming your free DUNS number and going through that process with them, that DUNS number will give you access to their business credit dashboard. And that will show you your business credit score for 30 days. That payment, they call it the Paydex score. You'll be able to see the Paydex score for about 30 days. So I would typically wait maybe a month if you're using these net 30 vendors that do report to Dun and Bradstreet, especially like the fair figure one. If you wait 30 days, they'll have already sent some of that information in, and then you can send in your you can apply for that net 30 account, and then you'll have 30 days for hopefully that number to show up. But sometimes though, the issue with that is if you don't create the score with them early enough, it can take longer for it to reflect, and you may miss that 30-day window where it just shows you no score. Other than that, typically you have to pay for them.
Thanks, Danny. I
Um,
have another question in the chat from Michael. Yeah,
okay.
if one has a credit card of say 16,000 credit line for over 10 years without asking for a raise in the line, and now wants to open another credit card with a CDFI, do these institutions tend to extend similar credit line to the first credit line amount? And would big banks tend to issue that second ever credit card closer to the 16K of the first credit card versus the CDFIs?
Yeah, it's a great question. Typically, if you're in that situation, you've had that line for 10 years, and you have the revenue growth or the revenue being steady for that long. When you do apply, they may request and say, okay, well, how much are you looking for? And you could request at the outset for that amount of money to be, whatever it is. Just as long as everything else is good, your payment history is good, you haven't made late payments, your balance and utilization is low, so you want it to be below 30% on the existing one. They're likely to look at giving you, more. Ultimately, what I said in the beginning was it's about giving those who are going to lend you money the confidence that you can and will pay them back. The will pay you back is the showing the transaction history and having the credit history of paying them back on time. The can you pay them back is, do you have the revenue to be able to service the loans that you're taking? One option could be, if you've never asked for an increase, you could ask for an increase in that existing card amount and try to get that bumped up. And a lot of times when you go to another institution, if they see that you have one, it's got lower utilization, but that, it does vary and spike over time, they may want to compete for your business and give you a credit line or options at a more competitive rate with a higher limit, hoping that you'll utilize them instead. It's best to explore and talk about your options, but they are probably, you just want to check, are they gonna tap your personal credit for that? Because you don't want too many of those hitting at the same time. And you want to make sure that they have some kind of pre-qualification process where if they are going to pull your personal credit, you're getting not, you can't get a guarantee, but you're going to get at least a pre-qualification note that you're likely to obtain it as long as the credit report comes back fine. Okay. All right. All right.
Thanks,
So
Danny.
moving forward, of course, to sales-based lending options. So first of all, the sales-based lending options are based off of transactions, right? So that's money coming in, verified dollars coming in through an online account. Companies like Stripe, Shopify, or PayPal, right, that connect to your website, that manage, even Intuit, which can manage your invoicing, whatever company you use. Stripe does online payments, they do invoicing. Shopify is mainly online payments, PayPal is either, and Intuit is either as well. So those companies, right, you see that payment volume come in. If you want to make sure that you use that account for all your transactions. So if you're going to send invoices or take payments online, you're going to send someone a link and they're going to click and put their credit card details in. Or they're gonna put their bank details in and then use that to pay the invoices. It's best to use one account for all of those receivables, because when they do that, then they'll route all that money to the bank of your choice, whatever institution you're using to bring all the money together. But that volume, all coming through the same account, is really important for how they calculate how much money they're willing to give you. And so you'll see that companies like these will look at like merchant-based loans. And basically significant payment volume means more options. So these companies, when they see enough volume come in, will automatically send you offers like that's financing based on your sales volume. And so what they're going to say is, hey, we see that you're typically billing, and receiving $30,000 a month through our service. If you need some short-term capital, we're willing to offer you a $10,000 or $15,000 loan, and we'll give you that money now up front, and then we will take the money and the payment off of future payments. So they're going to take 5% off of every payment that you receive moving forward to pay back that loan. They do tend to be better than third-party options like merchant cash advances, things we'll talk about next. So that volume can define how much. Now, you're only ever going to get a percentage of the volume that comes in. So if you're billing 50K a month, they're not going to offer you 100K. They're going to offer you some portion below that, 30K or 20K. But that's money that you can get access to now for business growth and expansion that they expect will automatically pay. You're not going to typically see an automatic payment unless you've been in business for a while and have significant volume. So you're looking at, 8 months or more of consistent volume to come in so that they'll pick up that, hey, this is a business that looks like it's going to stay in business. And then we can, take this option for these loans. Just make sure to read the fine print. what is the actual converted loan rate? And is that a good volume, a good option for you? Do you know that you're going to have a slow period on that payment cycle? So maybe they're offering you 15 months, 18 months, or 20 months to pay it back. And if they're taking 5 or 10% of every payment that you receive, if you hit a slow period, does that have a negative implication to your business? So you want to look forward into what are the impacts over time and your seasonal variance for your business before you make any decisions about accepting that kind of loan. Okay. Merchant cash advances. Now, big warning up front, these are not regulated. The rates, the terms, a lot of business loans, business credit scores are not regulated the same way personal credit scores are or personal loans are. If you do personal loans, any kind of personal loan, you actually have to register with the state that you're doing business in as as a loan provider, right? Even if you're a broker, you have to register if you're doing anything on the personal side. There's an extra level of scrutiny that goes into those. But to be a business broker or somebody providing those business loans, they can provide those for whatever terms you agree to at whatever rate you tend to agree to. So these are ones that come with a big warning. They're also the most expensive type of financing, of alternative financing that you can get. Right, you'll get that big up sum of cash, but they're going to ask you to be personally guaranteed. They'll come after your house or your car or whatever else they can get to pay these loans back when their high rates don't hit and don't go through. So just be very cautious when looking at merchant cash advances, which are different than sales volume based loans that we just talked about. So there are options here, but a lot of companies that we've seen that are in a position to take loans and have used merchant cash advances very, very quickly find themselves in trouble and overwhelmed by the interest on the payments, and end up having to go for something like an SBA loan or credit cards to try to get the merchant cash advance off of their books. Because funny enough, you miss a payment, you're late on a payment, it'll spike to a 50% interest rate, and all of a sudden a 20% credit card looks pretty enticing compared to it. So very big warning if you're going to look at this types of funding or lending for your business. Okay, so I'll pause there before we go to the actual requirements for an SBA 7A loan. I think we have another question.
Yes, Desiree asks, what options are good for startups?
Uh, yes. So the best thing you can do for a startup is go through the process and do those few things that I mentioned at the very beginning. I am going to talk about venture capital. And so now we'll cover SBA 7A loans and the requirements, and I'm going to talk about growth and how you meet some of those requirements and right how to put yourself in the best position. And the very last thing we'll cover is venture capital because it's the hardest money to get because it feels the freest, right? There's not an interest rate associated with it, but the requirements to convince somebody to give you that kind of lending is much higher for a startup. Um, so I'll cover that towards the end. But the absolute best thing you can do is put yourself in the position and always be planning for that future. And so all the steps I've covered so far, right? Officially get your business started, get a bank account, get registered, start working with net 30 vendors. And then get the get one of the business credit cards, or whether it's Fair Figure or NAV, which are great ones, or your bank. Like that is the absolute best thing you can do as a startup to get yourself moving and then to get access to at least some credit card where you can start to pay for things using that credit card to help get your business jump started from that perspective. There is no such thing really as free money unless you find a suitcase full of it, from some outrageous weekend that somebody lost it out in the desert. That's about the only free money you're going to find. Other than that, everything has an immense amount of requirements because if I don't know you, you're coming to me and saying, "Hey, Danny, I want to borrow $50,000 to get my business started. I'm gonna need really high confidence that you're responsible for it, that you're going to pay me back, that you have the ability to pay me back. You're willing to. There's just really high requirements to go to somebody you don't know and to ask them to give you a large sum of money. So that's kind of the way to look at it is, hey, I've got this great idea. I've heard that there's, ways to get money out there for free. The only ways to really do that is maybe grants, from that perspective. But grants, are a whole nother beast that I'm not covering today. But the real, hot take on grants are, if you want a grant, then you need to make sure that wherever you're applying for a grant, you're helping them to meet their goals. So if somebody's providing a grant, they have a charter and a mission and to impact the world in a particular way. And if you know that you can help them achieve your goal when they give you a grant, and they can count, the grant that they gave you and the service that your business does towards their goal, and they can report that to their members, they can report that to the government where they've likely gotten money from, then you have a better chance at getting accepted for a grant. So it's not about what you're going to do with the money, it's about whether what you're going to do with the money helps the grantee. And that's a hot take on grants. So, okay, Mary, any others?
No, that's it. Thanks, Danny.
Okay, so requirements for SBA 7A loans. This is again, the 7A is a specific type of loan. I think there's 15 different SBA loans. It varies because there's 7A, 7B, things of that nature. But usually the SBA 7A loan is the easiest to acquire, but that doesn't mean it doesn't come without restrictions. So that this is their primary business loan program. And it does have restricted use. I'll cover what that use is in a moment. But it really is there to provide that financial help for small businesses by guaranteeing a percentage of the money a bank is going to give you, right? Which loosens the restrictions, but it doesn't mean they're without them. So these are the actual requirements. I'm going to pause for a moment and I'll let you read that. Okay, I'm going to go in reverse order. So I'm going to start with the revenue. So they do typically want, when I say they, I'm talking about loan brokers, or financial institutions. They do typically want a minimum of 100K a year. However, we have seen companies that are in really good positions and have really good payment credit history, great personal credit scores, and a good business credit score be able to get, lending off of like having 60K a year in, revenue. So the minimum of 100K is that these essentially are, if you meet these requirements, you're pretty much almost guaranteed to get an SBA 7A loan, as long as as long as you're not in a restricted category. So 60K is possible, but look at these as a minimum and look at these as something to strive towards, because you may have a need today, but if you're not able to meet these these requirements, that represents too high of a risk for the lender. And that's the way to view it. The business credit score. Now I say FICO SBS at 155, which again, remember I said earlier, like a personal credit score of 660 and a business credit score of 80 means an SBSS score of 155. 155 is the minimum, depending on the loan broker that you work with or talk to. Sometimes I'll hear 155 or 165 is the minimum score that they want. So if 165 is roughly a personal credit score of 680 to 700, plus that payment index score of 80. So you can see the higher your personal credit score, the better it is. And when you go for an SBA 7A loan, the whole reason I'm talking about, work with the accounts that don't do personal guarantees, that don't do personal credit checks, is because they're going to do a personal credit check, a hard pull on your credit. And hard pulls do have an impact over time. And if there's too many, that can be a disqualification, for you. So protect your personal credit score. And if you try to get it up to 720, 740, because then your FICO SBS jumps up, and that means that you can end up on the lower side of the ranges. It's always like a couple percentage points plus whatever prime is. So right now, business, loans for the SBA 7A have ranged anywhere from 7% up to 14%, depending on where your score is and the other factors. 2 years in business. This is a hard requirement. If you can't show a business tax return from 2 years ago, right, and you can't show one from this year, then you haven't been in business long enough. And that is a hard requirement that they're going to look for. So if you haven't been in business for 2 years, even if you've met all of the other requirements, you're going to have to likely look at a different lending option, and there will be different lending options for you if you've met all these other requirements, just not an SBA 7A loan. Okay. And then an actual form business. So those are the hard requirements. Now, the additional categories of, okay, so I meet these requirements, Danny. What can I use the money for? And these are your allowed uses. So while you're reading those, I will tell you what is not an allowed use. No gambling, no sexual based activity or work. So I'm sorry if you have an OnlyFans, you can't go get new cameras and new lighting for yourself, for your business. No strip joints, no bars and alcohol. So nothing that's highly regulated by other institutions. Those things are not going to be acceptable or allowed uses from the government for that loan. So again, I'll pause there so everyone can take another look. These are the ones that are allowed. There are potentially a few other categories, but these are the primary ones. Okay. Now, before we go to growing business revenue, and this section is all about helping you, right, to get your business in position. Because even though I say, like, these are the allowed uses and these are the requirements, they are going to want to see a business plan. They are going to want to see a profit and loss statement. There's additional things they're going, the way that they want to verify this and they want to know whether or not they want to do business with you is going to require additional things, which we'll cover in the next section. These are the hard requirements in order to qualify and the allowed uses, but the way they want to talk about them is going to be covered in this next section, which is business plans, business strategy, and the like, marketing, and you'll see as we continue to go. But I'll pause there. Any additional questions, Mary?
No, we're good. Thanks, Danny.
Okay, perfect. So growing business revenue. Two ways to grow your business, right? Plans and strategy. And so when I talk about plans, I'm talking about business plans. When I talk about strategy, I'm talking about your business strategy. Plans are something you control. Strategy is something that you have a theory about. Okay, so a business plan, when I say it's about resources you control, you're laying everything out. Hey, this is the market I want to be in. This is the business I want to be in. Here's how I'm going to spend my time and my resources. You're in total control of all the parts of a business plan. And I'm going to jump out to where to obtain your business plan template. So let me jump over and we're going to start off here with the business plan template. So I'm here on the SCORE website, and you can literally just type business plan template and SCORE, and you'll see a link for this page here. And so when you come in here, right, so business plan template for a startup business. So when you come in, you can come here, you can read a little bit about it and what it includes, and you're going to see it's based off of the same one that the next section I'm going to show you is based off of. And so executive summary, company description, product and services, all those sections are the same here for SCORE because this is the same model that the SBA recommends that they want to see when you're going to go for that kind of a loan. So you're going to see that match. And so you can just come in, you can download that Word document there, and then you can start typing away and working on it. Now there are tools out there that will help you when you work on it. Now I'm going to show you that's free. The template's free. I'm going to show you the free way to get help when you're working through these different sections of that business plan. So let me tab over to the Opera browser. Now let me unpin this because I'm going to say when you come to the Opera browser, and I'm just using this as an example because it is accessible in other ways. But when you come to the Opera browser, they have it built in and it's really great. So their tool, you come over here to the left, and it's called Aria. You can click on that and then you'll see me pin it here. And then you can, come into this section and you can start chatting and typing right away. So I could literally type, help me write, if I can type correctly. Okay, so help me write a mission statement. or a boutique clothing store uh, utilizing, uh, let's say, utilizing donated clothes. Okay, so we just type it in there, and you're going to go through each of the sections. Each of the sections will have a question, um, and then creating a mission statement. Okay, you can see here to provide sustainable and stylish clothing options to our community by reimagining donated garments. We aim to offer high quality, affordable apparel. So you can see it helps write it for you. This is a great way to work with that template and the document in order to try to get some of those answers for what you want to do. Now, um, my co-founder Yana has a really great way to approach anything with AI, and it's an 80-10-10, right? You're going to provide that 10% up front with your prompt, and you have to guide it with that personalization for kind of what you want. 80% of the writing is going to come from the AI like this, and then you need to come in and modify about 10% of what was written to make it in your voice, to make it associated with your branding, to shorten it, to make it not sound like a robot wrote it. But at the end of the day, this is saving you a lot of time and gives you a first draft to work off of, and then you can edit it to your heart's content. So the way we view AI at Growegy is it's a productivity tool and something to help augment the human worker. It isn't there to replace you, even though you can do automation and save some tasks that you may not want to do later. At the core, the way to use the AI, especially with the templates, is to help you get started with that first draft, and then to go and to fix it. The biggest problem with AI is if you're just using this and copy, cut, pasting, you know that there's 50 other people doing the same thing, and that pattern of the way AI writes will start to be detected by those who will give you a loan. They'll see that you're maybe not, they'll assume you're not truly invested in the business or don't know what you're talking about if you can't answer it, which is why you want to edit it, why you want to make sure it represents your passion for why you're starting your business. So those are your two free options. On the business plan template side, I'm going to come over here. Now, this is the Growegy interface where we have business plans incorporated. I am not here to sell you Growegy. I'm just here to show you the different ways and options for how it goes. Now, again, same thing: company description, market research, mission statement, product. So when you come in to Growegy, you can help train other free AIs to give you a little personalization. It's a little bit clunky, and you're going to have to write a lot more than whether you utilize a service or a tool that can help you to do it. So in the personalization section, we created a company called Parby Worker, which represents or reflects a real company, Warby Parker, in real life. And it's all focused around a wide range of eyewear, including prescription glasses, sunglasses, contact lenses. You can see we put in what the funding needs are, what the funding details we want, who the audience is, things of that nature. So now if I come in here and I can say, hey, in this section, briefly describe, if I want to complete a full business plan, briefly describe your main product or service and focus on what your business offers, right? How it helps your customers and their goals. The great thing is if you want to start writing on your own, there's actually examples here for different types of businesses. And we can say these are examples, and these examples are provided a little bit from the SBA themselves, and then a little bit from what Growegy has done in working with customers. So we have examples here that you can use to give you an idea to how to start your first draft, or because you've put in that personalization and our AI knows what you are, you can just click help me write. And now it's going to go through, it's going to scan everything you've entered, and it's going to write that statement. Now, this is probably a little bit small, so I'll read it to you. But it says, Barbie Worker LLC specializes in providing a diverse range of eyewear products, including prescription glasses, sunglasses, and contact lenses. Our innovative offerings enhance vision correction, protect against harmful UV rays. Okay, I'm going to stop reading there. Immediately, I would get rid of our innovative offerings. Like, that is such computer speak, and that's where that 10% editing comes in. That doesn't really mean anything to me. If I, like, you can see I'm like literally wearing glasses, right? So I like innovative offerings. Like if I'm going to shop and say, "Hey, why should I buy those glasses?" Oh, it's innovative offerings. It doesn't mean anything, so get rid of it. So I would immediately start editing it, and but that's a great tool. I have a great thing to critique and improve upon, so that it's more relatable to my audience. When I go to show this to a banker, and they want to understand, what are you doing? Why should we lend you money? Is there a clear plan in place? You can define all of these things. And then you can see, I can come over here. It's already saved, so it got the check mark, and you can come through and look, are there any things that aren't there? I can go to review and download, and this is the exact same thing. So this is what you're seeing here is what you're going to get when you download the template from Score and you manually use the other AI to try to get to this area, or if you manually write it, you're going to have the same thing where you come in and you have all these different sections to find, and then you can download that document into something that's printable. You can edit it, you can add images, and then you take it to that next level. So there's just an area for business plans. And so let me jump back over to the presentation. So that was where to obtain those business plan templates and how to utilize them, how to save yourself time, and to utilize what's out there. So I'll pause there on business plans before we go to business strategy, because you see in the business plan, it's everything that you define, right? Who's your audience? Who do you think your audience is? What you're going to do from that perspective. So, Mary, any questions on business plans?
Um, Desiree had a question about whether or not it will do the financials.
That's a great question. So the templates from the SBA, from Score, from others, they don't include a financial template. And I'm trying to be sensitive and light to the to the requirements for what we need to do. So let me just go back. Give me one moment. I'm going to jump back over. Our tool does do the financial analysis statement. It does help with it. So there's a do-it-yourself template sheet that you can request. This is for customers. And so we give them a spreadsheet to do that financial template and analysis to start to answer those questions. It's automatically like all the formulas are in there. You put in all the information in the different sections. And when you do that, it automatically creates the charts that you can then copy and paste into the actual business plan itself. And then, of course, there's consultations if you want help filling it out, or you can download it to do yourself. There are other financial templates out there you can search on the web. We created our own. We used a CPA to create it so that our customers had access to something that was a little bit more vetted, and we go from there. So it doesn't it assists you in what to do and does all the calculations for you, so you know how to do those calculations. But we're not a CPA. And we do have partners, that we could always refer people to. So if you're looking for somebody to help with the financial section, we always could refer out in terms of companies that we're associated with, that can help companies do what we don't. So, okay, so that's the business plan section. Okay, so moving on to business strategy.
Danny,
Oh, go ahead. Yep.
I'm sorry, could I jump in and also say there, if you go to the score.org website and click on resources under templates, there are some financial templates in there, but you're right. You may need to consult a CPA or someone to help with those, but there are some financial templates that can get you started in there as well.
Okay. So finance and accounting. So I'll just navigate there. We're here doing this together. So okay. So it looks like there's a couple recorded webinars, articles, and I'm sure I could just search for
It's
Score.
under templates and resources. Did you go if you go
I'm just cheating and using. There you
Okay.
go. There you go. Okay, here you go. Here's your financial projections template for free. And you can download that template. Now, I think I haven't seen this, but Mary will vouch for it. So And then, what do you use it for? What's the template in there? So there's a way to also get a template for free, right? And not necessarily using a net 30 vendor like Growegy to do it. So good options all the way around in order to solve those problems. Mary, thank you for jumping in.
Thanks, Danny.
Okay, I learned something today. I appreciate that. Okay, business strategy. So the strategy is different from your plan because it's a theory of how you're going to win, right? And you're going to define this unique value proposition for your company that's internal, which is that articulation of your strategy. So it's saying why that theory means, okay, if I'm going to do eyewear, or if I'm going to do clothing, or if I'm going to do a fix and flip, or whatever the business is that you're going to do, maybe you're really good at making something and doing 3D printing that the world needs. And why is the way that you approach providing that solution or that product to customers, why is that better than the company next to you that's trying to do the same thing? So you need a theory of competitively how you're going to win, why your product is better to the customer. So does that mean what value are you offering to them that's better than the other value? Are you offering an equal quality product for less money? Do you deliver things faster so you have a faster production time? So maybe it costs a little bit more, but it's going to get there on time. Can you demonstrate that your product is better in some meaningful way to the customer that for what they value for that category? And can you demonstrate that in a way where you're tapping into people's frustrations? So maybe people are frustrated about something breaking too soon, or like the buttons on a remote not working or lasting long enough, or the whatever the case is, whatever category it is, you need that unique value proposition for why you're better. And you don't control that. Again, that's a theory, because you're saying, I believe my customers value this thing, this product in this way, and because of that, they are the ones that get to validate. Right? Business plans are very comfortable. You're in total control of them. You get to write them out. You get to execute against them. You get to spend your time on delivering and building those products and coming through that process. That strategy, that business strategy, is uncomfortable. And if it's not uncomfortable, then you're probably actually talking about a business plan. If it's uncomfortable, that means that you have a theory and you're testing that theory in a marketplace against competitors, where your customer is the one that gets to validate whether that theory is true or not. You don't get to define that, your customer does. And your theory is true, and you start to feel good about your theory and validate your theory when you see it working and a lot of customers coming in and validating it and signing up. So that's the difference between a business plan and a business strategy. Okay, you don't control it. Strategies are a little uncomfortable. So how do you articulate that strategy, right? And again, it's what makes your product or service unique or better and is valuable to your audience. So to do that, you have to understand your audience. You have to highlight those unique benefits, and you need to be clear and concise. So, on understanding your audience, you want to first do your market research. Now, maybe you've been in business for a while, and I won't assume that everybody hasn't, but maybe you are just starting, or you've worked in the industry, or you've seen a need or had that need yourself and said, well, if I have this need, maybe others do. You need to validate that. And you can do that market research by you can do surveys, you can talk to customers at a potential competitor. There's a lot of different ways to go out there and to validate whether or not this is a business you should be in, and what are their pain points. And that's essentially why you want to start a business. If customers of a solution or product have unmet pain points, or unsolved pain points, that usually can define a business opportunity. And that starts to help you create that theory for what is more valuable. And then you go to your business plan for, how do I fix that problem? What are the things we need to do to provide that fix? And then, is that actually, what they're telling me, is that actually true? And how can I test that before diving in fully? The second thing is creating a customer persona. So you want to have those detailed personas. Now, in the business plan section, thankfully, there is that business plan, that persona section, where you're talking and saying, here's who I think my audience is. But there are online tools, if you're already in business, if you have a website, where you can say, oh, all right, I need help understanding who my audience is. And that's where some of the free tools on the social media side are super valuable. So starting off with Facebook Ads Manager, what you do is you take a cookie, which is just a little piece of code, and you put it on your website from Facebook. And then over time, after a week or a month, you're going to have enough people who have visited your website that you can go back to your Facebook audiences tool, and you're going to say, hey, what is the demographic of people who have visited the website? And the reason Facebook is so much better is because they know so much more about you than even Google or Apple does. Because they have the way that they define their audiences is so finite, and there's so many subcategories for preferences in the Facebook and Instagram. And you know that as soon as you start talking around your phone and then you click on Facebook or Instagram, immediately you're starting to see reels or posts or advertisements that are relative literally to the thing that you just mentioned and talked about. Unfortunately, our phones are always listening to us and they're using that for you. But at the same time, it's a really powerful tool for a business to tap into that to say, how do I figure out who is actually interested in who's coming to my website? So if you have a newsletter, if you have anything that you can offer that gain an audience and people start to visit you, then you create an audience in Facebook. Then you can go and say, okay, is my demographic, what gender is my demographic? What age is my demographic? Where is my demographic located? What are their other interests? What do they value? What are the other things that they like? And you can get that real clear profile of who your customer is so that you know how to talk to them. Then, if you want to reach new audiences, the best thing is you can say, create a lookalike audience. So you know that's your core audience that has visited your website. Facebook will go find people that look exactly like that audience that haven't visited your website, and now you can start advertising to them, even $5 or $10 a day, and you can start to reach a new audience that looks like people who already visit your website. So really, really powerful tools in terms of understanding who your demographic is. Even more valuable when it goes to the next level to say, um, how do I start to reach new people and understand who my audience is? So very powerful marketing tool, but also great for that internal knowledge. Now, once you know who that audience is, you can start and you know what the products are, what their pain points are. You can then go and start to actually solve and write that internal statement that's going to guide your strategy for how you're going to put out your marketing, how you're going to try to compete in the marketplace. So I'll let you read that. And then I'm going to show you for Growegy when we fill that in, what that is for us. Okay. Okay. Jumping over. So for small business owners who need to build business credit and their business revenue, Growegy is a planning and marketing tool that is offered on net 30 terms. And unlike competing products, Growegy goes beyond templates, providing you hands-on help. And so that's our internal statement, because every account that signs up with us, right? So we have enterprise tools for commodity prices, and we provide everybody with an account manager. So you get at least to talk to a real person once a month to help you to define all those different sections and all the different tools and to grow your business with Growegy. For your business, right, and you highlight that unique benefit, you say for customer base, which is why we talked about who your audience is, and you've defined what the problem is that they need to solve, your company, right, is what type of a solution and solves what type of a problem, right? You need to boil down your business strategy to that unique statement. And then you want to have an eye towards competition. So unlike competing products, right, your company or product name goes beyond some basic value that every company provides, providing you, right, a unique benefit, providing a unique benefit for your customer that they care about. So that is the model for how to define your business strategy and that statement. At the end of the presentation, we can send this out, the presentation out, Mary, to everybody who has it, so they have that template. They can write to that template. And that template was one that we learned from working with venture capitalists for how to really nail what you're doing in the marketplace from a competitive standpoint and what unique value you offer. So if it's good enough for VCs, it's good enough for banks and any other institution, and for your day to day, and really forces you to think hard and refine your approach so you have the best chance at success. Clear and concise. I'm going to jump past these pretty quick, but essentially, you don't want to overcomplicate the message. Keep it as short as possible, and focus it really on that value-driven content. So, as you're providing content based off of that statement, then you wanted to make sure it's directly related and always talks about a value. And what are values? Some of the values that customers love. They want to save time. They want to save money. They want a product that lasts. They want no hassle. There's a lot of things that people, convenience that people value and are willing to spend more money on because it meets one of the things that they value. And I say it's more convenient, which ultimately boils down to it saves them time. Because it probably doesn't save them money if it's convenient, but it definitely will save them time. And if that's something they value more, you should know that about your audience and position that way. Okay. Use compelling evidence. So on your website, in your social media platforms, at your brick and mortar, you want to talk about satisfied customers. So the number one thing you can do for your website in terms of conversion rate is you have your simple statement up front, about the value that you're looking to provide, about the solution that you offer. Make it clear and concise at the very top of your website. The very next section down, so that top section is called the hero. The very next section down is what we call social proof. And at PayPal, where we have millions of visitors, on any given month, this is one of the things when I was there that we validated and verified. When we move social proof from the bottom of a page where everyone likes to put it, or one of the lower sections of the page, and we moved it to the second spot on the website, it had a massive increase in the amount of conversions that people did in buying the product on their first visit. So we're talking about like 20 to 30% increase in the amount of people who converted off the website just because the satisfied customers talking about the business that we did for them. Says, oh, whatever my business was so valuable. They met this service, they met this need. And the best thing about having existing customers and getting them to write a testimonial for you is that will also help you to understand how to rewrite that value statement to guide your company, because you're really understanding what they value. And it might be different than something you had previously thought, or it might refine or expand or give you new ideas about new products that you could offer or expand upon based on this. So it's got twofold. You're doing additional audience research, you're validating your strategy even further, and you're increasing your conversion rate by moving it up. And it wasn't just PayPal, it's been any website we've ever been a part of has increased conversion rates when you put the social proof in the second section on the website. So highly recommended to do that. Okay. So I'm going to pause there before I go into venture capital and talk about the 5 steps. Now, I know we got about 10 minutes left, so I'm going to go through the slides rather quickly. But again, you can get all of the questions that are going to be asked, there at the end. So, Mary, any thoughts or questions?
No, we're good for now, Danny. Thanks.
Okay, perfect. Here's the 5 steps. In terms of institutional investors, there's 3 types. Okay, angels, venture capital, and private equity. Angels is an individual or somebody who has a passion that is willing to provide you some level of money for a future payback or part ownership in the company. It's not necessarily a loan, but it's a way. So you're going to somebody who essentially has money, who likes to invest in various businesses or has an interest in the general area, or wants to start something out of passion with you, but has the money and funds to do so. You can obtain that, and usually you would give them some portion of the company, 1%, 5% of the company, 10% of the company, depending on how much money. It's usually best to have more than one angel, so you want to go for 2 or 3 angels. And then the amount of money that you need, you try to get equally from each of them, and then you give each of them a portion of the company, because now you're also building somebody who's invested in the success of your company because they want to make their money back. So they're willing to introduce you to people. They're willing to do more besides just hand you the money. And that's where the angels become pretty valuable. Venture capital are those in the business of lending money so that you can sell your company and then they can make their money back 5 or 10x. So that's essentially how they're done. They assume for venture capital that of all the money they lend out, they're only going to get back 20%. 20% of companies are actually going to succeed and they're going to sell. So if they lend out, $1 million, and then 80% of the companies fail, right? They got that 20% left on that 1 million. So it's like 100,000 each. They need to make $1 million to $5 million off of that money when they sell your company for massive amounts of money, in order to make that back, because they know for every million they lend out, they're only going to, only, or every 10 companies they lend to, only 2 are going to succeed. And so that's why venture capitals are like, they're going to ask you very specific questions, which I'm going to show you what those questions are afterwards. Private equity is a different ballpark. Usually private equity will come in and will acquire something from venture capital or angels to take those companies public, or to be in relationships with those companies longer because they want to combine companies, or they have a longer vision. They're much more hands-on. They have teams that are hired and dedicated to coming into the company and working alongside the founders, to try to grow. So in terms of getting the lending from them, it goes from challenging to very difficult. Here's the 5 categories of questions, right? You're going to have to answer to all of these authoritatively and convincingly. First, how unique is your idea? And they're going to ask, who's your competition? If you tell a venture capitalist or a private equity that you don't have any competition, you're dead. They will not lend to you, because they want to lend in a defined market. Or if you're at the cutting edge of defining a market, the amount of proof that they're going to require that it's a real market is much, much harder. So they're going to ask you questions about who's your competition, and you should know who your competition is. You should know what the customers value and why your business strategy is better than their business strategy. Is there a market, right? So is there a defined category? And those are going to be the companies like Gartner, as an example, which is a company that looks at trends in competitive marketplaces over time. And have they defined the solution you're offering into a category? And then a hard question is, what stops a big competitor from taking over? If you're asking for money to expand your idea and rapidly move to the marketplace, what stops a company where you're literally going to be taking their customers? If you're if you're a financial company offering some kind of financial solution that's better than the next big company, what stops that company from spending a ton of money to develop that same product when they learn about it, and just overtake you and crush you and offer that to their existing customers on a trial period for free instead of paying you a new startup for it? So you have to have something unique. You have to have something that they can't replicate. You have to have something that's, IP protected. So intellectual property laws, you get a patent, you get something that gives you an edge over other competitors for a set amount of time. And then again, why is your idea a better way to solve the problem? You're going to have to answer that question. How will you make money? So do you know how to sell? And do you know who to sell to? Again, it always comes back to that audience, but do you know how to sell? And you can say yes. So they say, okay, great. Who have you sold to? Where are your customers? If you want money from venture capitals, you need to show that not only have you captured companies, but that it's a repeatable process. And the biggest way that they're going to ask is, if it's repeatable, is, have you taught others how to sell your solution? So yeah, as a founder, you know how to sell, but is your company based, and your company's success tied to you as a founder, or is it scalable? If others can learn how to sell your solution, then your company's scalable. If it's not, then you're not likely going to succeed. And what's your sales cycle? If you're selling a product that costs, that is going to ultimately get you an invoice and a customer that'll give you $10,000 in a year. However, if it takes a year to gain that customer, it's not really cost effective. And so your sales cycle then is too long. And then that starts to put questions back in a VC's mind that, you know what, maybe you haven't defined the competition, or you haven't defined the category enough, or your idea isn't unique enough if you're not making enough money, or if it takes too long to sell. So every time you can't answer a question on one of these slides, it's going to reintroduce questions back from the original slides as we move forward. Are you growing? For venture capital, one of the most important things. Can you consistently close deals? How many months of growth do you have? So you know, like, have you grown consecutively for 6 months? And I'm selling 10, then I sell 20, then I sell 40, then I sell 100. Am I getting exponential growth? And how many months of growth do I have in obtaining those new customers? And do you know where your future growth will come from? When you tap out of the particular market that you're going for, where do your customers exist? And how do you know that they exist there? And why right now? This is a harder question to answer. So have your customers really expressed this demand at large? Is there a giant unmet need in the marketplace? This is why defining competition is important, because if there is competition, whether that's an existing large company that has these customers or other startup companies or smaller companies that are trying to buy and compete for that business, you know, is there a way for you to understand that this is an unmet need? And then again, if your solution didn't exist, you know, what would people do? How are people solving for that problem right now? Even if it's not an easy solution, you know what? They have to use 10 different sets of software. They have to, you know, have 5 people working on the problem. And my solution makes it so that they can use one piece of software and they need one person to work on the problem. That's a massive cost savings, and then says, oh, well, then that leads to me being able to teach sales. You know, hey, companies, why are you wasting resources and time when those people could be dedicated towards making you more money instead of solving a problem that we can help you solve 10 times faster? And now you're saving money, and now people are willing to worth, and they're saying, well, how much money am I spending on 10 people, on 5 people, and 10 software solutions? Okay, so I'm spending $1 million a month on that. Okay, great. Well, this company only wants $100,000 a month. So I'm going to save 9 times the amount of money that I can rededicate towards something else that makes me money instead of being a cost center. These are the types of conversations you'll have to have if you want to go for venture capital money. Okay. And what's my opportunity cost? This is not a question you're going to ask. This is a question the VC is going to ask themselves, right? So, one, you know, you need to be compelling, and you need to have compelling and exciting evidence for all of the four categories I already gave you. They're going to ask who you are. Why are you the right person to solve this problem? And that's the question they're going to ask themselves. And so that's what they're going to look for as they go through the journey of asking you all those other questions. It's going to take many, many meetings with them and several months to get through there. And do they want to work with you for the next 10 years? When VCs look at you, they're like, okay, it's going to be a 5 to 10 year plan that I'm going to be working with these founders of this company. Do I want to continue to work with them? Or quite frankly, do I think they're jerks? And even though they have a great solution, you know what? I have other areas that and other companies I can work with. So if they're looking and they only have $1 million to lend left in their portfolio, and they're looking at your company and another company, sometimes the tiebreakers are whether they want to work with you or not. And these are real questions that they're going to ask themselves. And with that, we are exactly 1 minute short of time. So, are there any Q&A?
Way to bring it home there, Danny. I don't have any questions in the chat. If anybody has a final question for Danny, please put it in the chat or unmute yourself. Anyone?
Looks like Michael has a follow-up question from above.
From above.
See if I can find it too.
Oh, okay. Here it is. Can you speak to this universally? Oops, hang on. I missed this one. I apologize, Michael. If one's credit score is steadily excellent, no debts, but revenue took a hard hit in the last several months, would that work against us? In other words, would it be best to wait for a few tens of thousands to roll in, and then within days after attempt to open the second credit card if the goal is to maximize credit line amount?
Okay.
Are you reading it too?
I just found it too. Yeah. So not sure how
Okay.
easy it is to transfer and receive a big jump in credit line after revenue pours in. Okay, I see. So the great thing that you can answer, so in terms of credit cards or credit lines specifically, uh, you, depending on who you're talking to and who the lender is, you can do one of two things. You can talk about um, expected or projected revenue. So if you know you have revenue coming in later in the year that's promised or contracted, you essentially can count that now, even if you can't show for it in the books. As long as you're not doing a transactional based like merchant advance, then the hit in revenue won't have as big of an impact. For an SBA 7A loan specifically, so bridging into those, even if you had a loss in the previous year, as long as you still have the revenue requirements and otherwise meet the requirements, you don't necessarily have to be profitable. You just have to have the ability to service that loan. So if you're already, and I know you said right, no debt, I just wanted to expand into general for everybody. If you're looking at the, you know, you have a loan, you have bad debt on the books, if you could refinance that debt essentially through an SBA 7A loan for an appropriate use, and you go from paying 30% to 10%, that could be enough on the financial projections to show that you could end up with a net gain or profit in the current year, which will be enough to say the loss last year didn't matter. In terms of the projected revenue, then you know, then projected revenue, expected revenue, you don't necessarily have to wait and ask. But if you're gonna have that conversation, I would actually have that conversation with who you're gonna get the credit line from, and ask if you know, it'll be okay from that perspective. So, um, okay, Michael, hopefully I answered your question there. I think you're probably still okay, but I would definitely talk to the institution. Is what it comes down to. Let's see. Okay. Can
So Amy,
Canadian personal credit score be accepted? I don't think so. It's gonna have to translate to the FICO. And you'll have to have that credit score specifically, unless you're gonna look at well, I'm gonna assume that's for the SBA loan. So if it's for the SBA loan, then no. Because they're gonna look at creating that E-Trans score at the SBA. And when they do that, they look at the FICO score for that.
thanks, Jenny. And Amy wants to know, is there a way to contact you to ask questions?
Yes, let me pop over. And I invite all of you to connect with me on LinkedIn. Well, that's, there we go. Oh, you know what? I just did the password. Hold on. Hold on. I'm going to stop sharing and then I'll reshare. I'm going to flip browsers, and I'll give you my LinkedIn. And then you can definitely, is the best way, because then I'll see it. I get so much junk and spam email that a lot of times when I give out my email directly without a conversation first, and a connection first on LinkedIn, I oftentimes miss it. So I know myself. So I want to be good about that. Give me one moment. I know I'm logged in on this browser. Okay, here we go. All right, let me share my screen. Okay, there you go. So it's, you go to linkedin.com/NIN/Danny G. Williams. And if you see that picture, you can type in Danny Williams and Growegy. If you're just going to do a search, you'll see that's my picture. So that's who I am. And send me a connection request, and then and when in the connection request, just mention this webinar, and then I'll make sure to prioritize, you know, accepting those as well. Okay. And then Michael said has one last question, I think. So, an absence of a promise commitment contract. So in terms of credit cards, they're not going to ask for your books from that perspective. They'll ask what your revenue is, and if you expect that revenue to come in, or if you at least have an equatable revenue from the previous year, and maybe your revenue is just delayed, you can say, okay, they ask what your revenue is. You can answer from what your total revenue is from last year if it's higher than this year. So you could use that, and that's a good strategy to use. because it's a real number that's equatable, and we're only halfway through the year. So who knows what the rest of the year is going to look like. If you could also do projected income. So essentially, when they're asking you what is your income, and you can't define it, it's not at the end of the year. It's still open, so you can also put in a projected number for what you expect it to be. But they're not going to actually log in and ask you to show you their bank account, how much you received for the most part. I'm not saying to fudge or to lie, but if you have a good expectation for what it's going to be, or you think matching last year is good, that's typically good enough for a credit card application. But if you have the opportunity to wait and money does come in and that helps, then that's not a bad option either. I think you have to be a U.S. business. So for Hannah, for the SBA loan, I think you have to be a U.S. business for it. So yeah, I think the 2-year-old U.S. business subsidiary would be better, but otherwise I don't think it applies. Yep, you're welcome. And you're welcome, Michael.
All righty, Danny, I think we need to wrap it up there. Thank you so much. This has been great. It's so great to see you again. Can you do me a favor? You said you don't mind sharing your slides.
Yes, yeah, absolutely. I'll send that over to you so we can send it out to everybody who attended.
That'd be great. So I look forward to getting them, and everyone who's still on the line, you will be getting an email from SCORE that will include the link to the recording as well as the slides. So thank you everyone for attending. Thank you, Danny. Everyone have a great day. Hope to see you again soon.
All right, take care.
Thank
Bye.
you. Bye-bye.